This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Spring rally. Stocks take off, capping a strong week for equities. But it's the Nasdaq that's really powering ahead as that index closes in on an all-time high.
Glimmer of hope, the experimental drug that's showing promise in the fight against Alzheimer's and sending shares of Biogen soaring.
Protecting your portfolio, our market monitor tonight has a list of stocks that he says will do well no matter what the dollar does. All that and more tonight on Nightly Business Report for Friday, March 20th.
Good evening, everyone, and welcome. It may be snowing in New York City tonight, but spring fever came to Wall Street today. The Dow Jones Industrial Average capped a strong week with a triple-digit gain. And the Nasdaq moves within striking distance of its all-time record closing high. The blue chip index up 168 points to 18,127. The Nasdaq gained 34 points, rising for 5 straight days to its third highest close ever at 50.26. And the S&P 500 was up nearly 19 to 2108. In a week of big triple-digit swings, the don't fight the Fed crowd won out. Stocks got lots of help after the Fed Wednesday dropped the word patient from its interest rate prognosis, but basically said it will be patient about raising them. The Dow rose 2% for the week, the Nasdaq outpacing the others with a 3% rise, and the S&P saw its steepest weekly advance in 6. But the focus squarely this week on Nasdaq, which closed above 5,000 for the second time this year, and on a few occasions this week, the index was up when the Dow and the S&P were down. So why the recent strength in the index? Bertha Coombs has our report.
The Nasdaq is now within reach of new all-time highs. And this time around, says JP Morgan's Kate Moore, the tech-heavy index is driven by profits more than hype.
We actually think that tech earnings are much more sustainable than they've ever been before. And in fact, in 2000 and kind of like 15 years ago, it was a completely different sector without earnings, and I think with a lot of hope and optimism behind it. This is a real fundamental story, and actually tech is one of our biggest sector overweights in our portfolios.
When it comes to valuations, the Nasdaq Composite and the large-cap Nasdaq 100 trade at more than 20 times earnings, not much higher than the S&P 500's 18 price-earnings ratio, in part because of diversification. Firms like Walgreens and insurer Anthem now list here alongside tech juggernaut Apple. Though there's one sector some worry might be frothy: biotech. The Nasdaq Biotech ETF is up more than 20% this year. Its outsized gains matched by triple-digit valuations.
Over the past month, we've seen an incredible amount of money flowing into biotech. It's going to continue to flow into the biotech sector, and I think that'll continue to be a driver of the Nasdaq.
Overall, small-cap stocks have also seen strong gains, helping to drive the Nasdaq higher.
Small caps are attractive for a couple of reasons. One, obviously, is the run-up in the dollar, and small cap companies tend to have more domestic exposure. But secondly, this was an area that way underperformed last year, and so I think you're going to naturally see a rotation.
One of the biggest changes from 15 years ago is that investors have more ways to gain exposure to these sectors through the surge in exchange-traded funds. They no longer have to make a bet just on individual stocks, and that can help mitigate downside risk. At the Nasdaq, Bertha Coombs, Nightly Business Report.
One of the areas on the Nasdaq that has been going gangbusters has been biotech. In fact, the sector has been higher for 8 straight days, and the ETF that tracks them is up about 42% in the past year. Today, Biogen was one of the best performers in the S&P 500 after its experimental Alzheimer's drug we told you about last night showed that in a study it significantly slowed mental decline. The shares jumped nearly 10% on the news. Meg Terrell has more on this possible breakthrough.
The expectations were sky high, and today Biogen exceeded them, giving hope for a disease with no good treatment options. In a small study reported today, Biogen's experimental Alzheimer's drug, known as BIB37, reduced the plaque buildups in the brain associated with the disease. It also showed significant benefits on 2 measures of cognition, slowing the declines in memory loss and thinking clearly compared with a placebo.
The data today was better than expected overall, and what's really interesting is this class of antibodies for Alzheimer's disease in the past have had very mixed results, and most other drugs actually failed. So today's result is great for patients.
The positive efficacy results were a surprise because the study was in the earliest phases, designed primarily to assess safety. The drug did show some side effects associated with clearing the amyloid plaques from the brain. It's thought that removal of the plaques can weaken blood vessels, causing them to leak.
One of the things they're going to try to do from now on is figure out whether a lower dose offers the same activity with a better safety profile, or whether they could change the dosing. At the current dose, the side effects look a little too high, so they're going to have to figure a way around it.
Biogen says it plans to move into a phase 3 trial this year, skipping over the mid-stages of testing. If all goes well, analysts say the drug could hit the market as early as 2018. But it's got a lot to prove before then.
In Alzheimer's disease, the chance for success historically has been low. In our note to clients today, we characterize that the way to think about it, we conservatively think about a 30% chance for success. But again, the data today was fairly encouraging, so maybe that's a little too conservative. Historically, there's been a lot of variability between the early stage testing and then the final phase 3 results. The issue is that the drugs have not been that effective, and on top of it, conducting studies in this disease have been difficult historically.
One foot right in front of the other.
Biogen did a few things differently in this trial. It tested the drug only on patients with early stages of the disease, suggested by studies of previous drugs to be the population that could benefit the most. And it screened patients to make sure they actually had the buildups of amyloid plaques in the brain that the drug targets. So while there's a long road ahead, both Wall Street and the medical community are cautiously optimistic. A successful drug for Alzheimer's could draw as much as $10 billion in annual sales, according to analysts, and provide hope for the millions of people worldwide living with the disease. For Nightly Business Report, I'm Meg Terrell.
And now to the currency markets, which along with central banks around the globe seem to be driving much of the market action lately. The euro rose against the dollar today after the leaders of Greece and Germany struck a slightly more conciliatory tone over Greece's plan to deal with its debt. But as Julia Chatterley reports from Brussels, the talks remain tense and there's still a lot of work to be done.
Talks between Germany's Angela Merkel and Alexis Tsipras, the Prime Minister of Greece, wrapped up in the small hours of this morning. But you didn't even really need to read between the lines of the statement that Germany gave. Angela Merkel used words like, yet again, once again, the onus remains on Greece to come up with a full set of reforms, and only then will they get access to the crucial cash the country needs. The one positive that I can pull out of this, though, it does seem that Greece is going to try and come up with those reforms over the next few days. They'll then be assessed by the European finance minister. So there does seem to be a greater sense of urgency about these negotiations. But I think the message from Brussels was that the pressure on Greece is going to remain very firm. In terms of the next steps, Alexis Tsipras of Greece will head over to Berlin on Monday. And the suggestion here is that if we are going to see some kind of breakthrough, perhaps it takes place next week on Monday in Berlin. But, you know, I have to say, I hope he goes there holding a great wad of reforms, because ultimately that's what's needed. For Nightly Business Report, I'm Julia Chatterley in Brussels.
And it was the move lower in the dollar today that sent the price of oil higher. West Texas crude shot up 4% to settle at $45.72. The commodity is higher for the week, snapping 4 weeks of losses. Meantime, the oil rig count continues to fall. According to Baker Hughes, the number of rigs drilling for oil was cut by 41 this week to 825, its 15th weekly decline and the lowest number in 4 years.
One sector that may be more insulated from the moves in the dollar, as we explained a moment ago, is small company shares, since those companies do most of their business within the United States. And today, the Russell 2000 Small Cap Index hit a record. There you see it. And that is where our market monitor looks for investment opportunities. Sandy Villery is co-portfolio manager at his own firm, Villery & Company, a money management firm with $3 billion under management. Sandy, welcome. Good to have you with us. Do you agree with the guest who in the earlier piece said there are a couple of reasons why she likes small caps now? One is that dollar thing. The other is that they have dramatically underperformed for a while, most especially this year. And at some point, this is going to probably swing back the other way.
Yeah, I mean, I'm a long-term investor, so if you go back to 1926, probably longer than any of us have, but small caps have outperformed by 2% annually versus large cap. And I do think the U.S. is the cleanest shirt in the dirty laundry when you look at the global economy. So I do believe that, plus playing catch-up from last year when the S&P did 13%, and the Russell 2000 only did 3%. We do need to play a little bit of catch up, and certainly the stronger dollar will definitely lead to a stronger, smaller cap year. So I think this year, if you can stay American and stay small, you're going to outperform in 2015.
Because it's really all about growth, is it not? I mean, the bigger, more established companies probably won't grow as fast, in theory anyway, as the smaller company.
Yeah, and I think that's true in any environment, that small should outperform or outgrow large. Just looking at a simple example of Zoe's Kitchen being a small concept versus a more mature McDonald's, I would certainly expect Zoe's to be riskier and outperform McDonald's over the long run. So we do like to focus on the smaller cap stocks in our Villere Balance Fund.
Let's move to your first pick, and that is Men's Warehouse. It went through a rather fractious acquisition a year or so ago of Joseph A. Bank. How's it doing? How has the integration gone, and why do you like this one?
Yeah, anytime you can buy a great franchise for the long term, and I'm a 3 to 5 year investor, and it has a short-term cloud over it, and that short-term cloud would be kind of getting rid of George Zimmer, the founder, the acquisition of Joe Banks, and you can buy a company that's got $6 in earnings power out to 2017, $150 million in synergies between the two. I think it's going to work out well for shareholders.
You can also buy one suit and get 6 free, Sandy, at that point.
That's right.
I knew that was coming from him. I knew it was coming from him. All right, DST is next on your list, Sandy. Why?
So they do data processing and software automation for communications, healthcare, as well as the financial services industry. And I'm very familiar with the 60% of their revenue in the financial services industry because it's mutual fund administration. They're basically doing the back office for my mutual fund. So their top 5 customers are very sticky. They've been with them an average of 35 years. But what I like about it is the valuation. They trade at 6 times EBITDA versus their peers at 8 to 12 times EBITDA because of the non-core assets that they're liquidating. They've got $125 million a quarter they're liquidating, and about over the next 2 years they'll liquidate another $1 billion they can use to buy back stock and pay down debt. So it's going to work out well, I think.
Your third choice is Financial Engines Trading. I'm not familiar with it, but I am familiar with the Nobel Prize economist Bill Sharp, who was one of the founders.
Yeah, he started this company in 1996, and basically it's a way for all the 401k corporate participants. They get all these mutual fund choices and all these. It's very confusing, and so he's got software that you can put in your age and income level and retirement, even a Social Security application to it that tells you when to take it and when not to. And it's been very successful. They've got now a third of the Fortune 500 companies, the likes of Northrop Grumman and Microsoft. AT&T just signed up with them, $40 billion in their plan. So I think this is going to work out well. And again, domestically based. And I think when you talk about a dollar and all this stuff, I think they're going to do well in this environment.
All right, Sandy, have a great weekend. Thanks for your ideas tonight.
Thanks for having me. Appreciate it.
Villere and Company.
Money is flowing into stock funds. Data from Bank of America Merrill Lynch shows $20 billion went into stock funds last week. That's the biggest weekly inflow this year. Exchange-traded funds attracted all of that new cash, $23 billion, while stock mutual funds posted $3 billion in outflows.
The Federal Reserve paid a record $97 billion to the U.S. Treasury last year, this according to audited financial statements. Much of the gain due to interest on the central bank's big bond purchases. In 2013, the Fed handed the Treasury about $80 billion. By law, the central bank has to hand over the bulk of its profits to the U.S. Treasury.
With the most recent Federal Reserve meeting in the rearview mirror, the word patience gone from its policy statement, and the door open to raising rates, what might it take for the central bank to start hiking? Steve Leisman takes a look.
Now that the Federal Reserve has signaled rate hikes could come at any meeting after April, Wall Street is looking closely at clues for when conditions will be ripe. Chicago Fed President Charlie Evans, one of the more dovish members of the Fed, stuck to his forecast today that the right time won't be until next year because he doesn't see inflation turning around.
I'm open to discussion, being persuaded that maybe this is the right time to start that. At the moment, I still think that 2016 is more likely given the forecast configuration that I see.
Evans said that because inflation has been below the Fed's 2% target for so long, it makes sense to let it run above the target for some time. But Atlanta Fed President Dennis Lockhart, a centrist, neither hawk nor dove, suggested that a rate hike is more likely this year. Lockhart said that serious consideration is being given to a rate hike at any of the 3 meetings between June and September. In its statement Wednesday, the Fed gave two tests for a rate hike. First, further improvement in the labor market, and second, confidence that inflation is moving back to target. Economists believe that the strong dollar and lower oil prices could keep inflation falling through at least the early summer, assuming they don't decline much more from here. The Fed's own forecasts don't show much movement upward until 2016.
And you want to get through a period where you can see what inflation looks like after you're getting through the transitory effect on these oil prices.
A couple clues to Fed policy could come next week with a speech by Fed Vice Chairman Stanley Fischer and one by Fed Chair Janet Yellen on Friday. But on Tuesday, maybe most important, the government will release the February Consumer Price Index. Economists look for a 0.2% rise that will only partially reverse the 0.7 decline in January. So year over year, and further complicating the outlook for Fed policy, prices will still be falling in the U.S., raising the question, why exactly are they going to raise rates? For Nightly Business Report, I'm Steve Leisman.
Still ahead, strong as steel? Not so much lately. Why some companies in the sector have been getting burned. The Federal Trade Commission reportedly made a decision back in 2012 not to sue Google for alleged antitrust violations. As reported by the Wall Street Journal and based on a confidential report, Google's search algorithm would place its own services above those of its competitors in search results. FTC experts wanted to sue the company, but instead settled the investigation in 2013 when Google agreed to change its business practices.
AK Steel is the latest steel company to warn about its profit outlook. The reason? Imports of the metal are flooding the market, increasing supply and lowering prices. Shares of AK Steel fell about 3.5%. But the company isn't alone. Morgan Brennan takes a look at why the sector is coming under pressure.
American steel companies have been on the front line of the so-called currency wars. Starting with AK Steel, shares of the Ohio-based steel manufacturer tumbled today after the company warned of a first-quarter loss as shipments fell 14%. Why? A flood of steel imports. In January, imports were 33% higher than a year ago, according to the American Iron and Steel Institute. And finished steel products from South Korea, Turkey, Japan, and Brazil grew the most. Analysts say imports have soared to record levels, adding to a supply glut in the domestic market.
If we look at finished steel imports as a percentage of supply, last year that number was about 28%. That number in 2013 was about 23%, which is normal. We look at a range of 20 to 25% as something that we typically would see because we are steel short in this country. But I think what's alarming is year to date, that percentage has gone to 30 to 35%, so a 1,000 basis point market share gain.
The stronger dollar has made imports look cheaper, in turn pushing U.S. prices lower, with the Midwestern Hot Rolled Coil Index shedding 20% just since the start of 2015. And that means AK Steel isn't alone. Two other U.S. steel makers, Nucor and Steel Dynamics, lowered their earnings guidance this week as well, blaming imports. Factor in falling demand for the steel pipes used by the oil and gas industry, and analysts are bracing for another tough year.
Now the fundamentals at this point are still very challenged, as we discussed. Imports peaking, steel prices at their lows. To the extent that energy markets at least stabilize into 16, I think you could see a pretty big pickup in growth, but not until 2016, 2017.
But this issue will remain in the spotlight because many of these companies are expected to testify about imports next week at a congressional hearing in D.C. For Nightly Business Report, I'm Morgan Brennan.
Shares of one home builder hit the roof, and that is where we begin tonight's Market Focus. KB Home posted better than expected earnings in its first quarter as strong demand helped drive revenue by 29% on the upside. The company said the strong performance was due to more houses being sold at higher prices. Now that is what you call insight. Shares of KB up sharply about 8% to close at $15.26. It always works with home builders. Sell more at more higher price. Upscale jeweler Tiffany had a sales drop and earnings that were relatively in line with estimates, but the king of bling warned a strong dollar will hurt results for the rest of the year. A stronger dollar is cut into purchases by tourists here in the U.S., while at the same time weakening the value of the company's overseas sales. Tiffany shares off just about 4% to $82.93.
Darden restaurants posting earnings that beat expectations and sales that met targets as consumers broke open their wallets for dinner last quarter. The company, which operates restaurant chains like Olive Garden and Longhorn Steakhouses, also raised its full-year outlook. Shares hit a 52-week high, up about 3% to $66.75. The seemingly never-ending mall saga between Simon Property Group and rival Macerich may be nearing an end. Simon says it's making what it calls its best and final offer for Macerich, raising its bid to a little more than $23 billion. Earlier this week, that bid was rejected. Simon's original offer was $16 billion. Simon Property shares were up nearly 3% to close at $197.34. Macerich trades on the Frankfurt Exchange. And Airgas cut its current quarter outlook for the second time. The supplier of industrial gas and welding equipment cited a weak economy, a sharp drop in oil prices, and the strong dollar for its weak guidance. Shares closed down 5% to $107.28.
A number of cybersecurity firms are planning to go public this year. Rapid7, Logarithm, and Mimecast are all set to sell shares to the public and seek valuations in excess of $1 billion. The firm's looking to capitalize on investor interest following a number of those high-profile hack attacks.
Coming up, what the Canadian medical marijuana industry has that the U.S. doesn't, and why big money is flowing north of the border.
The economic calendar packed next week, and here's a look at what to watch. Housing data on tap starting Monday, existing home sales. Tuesday, consumer price index, as Steve Leisman reported, that is a number the Federal Reserve will watch closely. And on Friday, the final read on fourth quarter GDP.
The government has unveiled the first set of fracking rules on federal and Indian lands. The plan includes provisions to protect groundwater, increase transparency on the part of companies to disclose the chemicals that they use, and higher standards for storing waste. Fracking is the process that involves pumping water, sand, and chemicals into a well to extract oil or gas.
Despite being legal in some states, the medical marijuana industry in the U.S. faces some big hurdles, like access to banks, credit, financing, not to mention navigating state and federal regulations. But our neighbor to the north, Canada, has made the sale of medical marijuana easier, and the money is following. Jane Wells has the story from Nanaimo, British Columbia.
No one's ever done this before.
This is a 60,000 square foot legal marijuana growing facility, the largest government licensed grow in the world, a place where workers wear clean suits, where security is akin to Fort Knox, and where there are no piles of cash lying around.
All of our transactions are done online or over the phone, and we accept credit cards.
Where do you bank?
We bank with RBC, Royal Bank of Canada.
Oh, cannabis. Our northern neighbor legalized medical marijuana on a national level, licensing private operations like this one called Tilray, so the country's 40,000 medical marijuana patients can order pot online and get it in the mail.
We like tight, tough regulations, but we also like clarity, and there just isn't the type of clarity that we see in Canada. There isn't the type of clarity like that in the U.S.
But Canada isn't the only nation in North America giving marijuana the green light now, at least on a medical level. Other nations are considering it right inside U.S. borders.
People are saying that this is going to be bigger than bingo. Now, I don't know what that means exactly.
At the Reservation Economics Summit in Las Vegas, Native American tribal leaders discussed the possibility of growing pot on tribal lands.
They're telling us that we could possibly create $3 million a year for our tribe alone as economic development.
The U.S. Justice Department has told tribes it may look the other way, as it has with Washington and Colorado, if tribes growing pot follow certain rules.
We've got 566 tribes in this country. They all have their own history, their own leadership, and they're going to make their own decisions.
Meantime, up north, the green wave rolls across Canada. Tilray expects $20 million in revenues this year, $50 million next. And since medical pot is legal on a federal level, it is free to do the sort of research on the plant unheard of down south. For Nightly Business Report, Jane Wells, Nanaimo, British Columbia.
And finally tonight, what would you rather save for? Vacation or retirement? It's a question many have probably asked themselves. And according to a new survey by TIAA-CREF, savers would rather set aside their cash for some time on the beach. Only 8% of savers listed contributing to an IRA as their first priority, about the same percentage of people who had no idea what their top savings goal was. That's not very encouraging for long-term retirement savings.
Would be mine, for sure.
Mine as well.
Right now.
We'll see. That's Nightly Business Report for tonight. I'm Sue Herrera. Have a great weekend, and thanks for watching.
And from me as well, thanks. I'm Tyler Matheson. Have a great weekend, and we will see you back here on Monday.